We are Entras. Together, we build software for controlling flexible assets for the industry.
We strongly believe that the future will be flexible. Any industry, big or small, any building, any home will make use and make profit out of flexibility.
That future starts now. In this podcast series, Flexing the Future, we share our insights on flexibility.
So welcome to this episode of the Entras Flexing the Future podcast. With me is Dieter Jong, energy market expert. Welcome, Dieter.
Thank you, Jens. Yeah.
The topic of today is PPAs, or power purchase agreements, and their impact on flexibility. So to start off directly, could you maybe briefly explain what a PPA exactly is?
It stands for Power Purchasing Agreement. So what you're trying to do with a PPA is to buy energy. Now, in general, you have a lot of ways of buying energy, but a PPA usually refers to an energy contract with a renewable energy asset, where you have a direct link between somebody who produces the energy and who is consuming it.
Okay. And is it, it's a bilateral thing, I think? And is it like a standard structured thing, or is it really broad? And do you have different types of PPAs?
Well, there's I think as many types as people talking about it. So there's quite a lot of them. But in general, I think PPAs, like I said, refer renewable energy assets. And then usually they used to be bilateral contracts between a renewable energy producer and an energy supplier/trader. Now, what we do see, and I think what the topic of today is going to be about, is that we do see PPAs emerging into the industrial market, where industrial consumers are starting to sign off PPAs directly with renewable energy assets to greenify or to get a lower carbon footprint into their energy supply mix. And then typically the PPA refers to the long-term, usually a long-term contract with that renewable energy asset in different forms or shapes, depending on how the two bilateral companies negotiate it. But you have also multi-party PPAs, usually when you go to bigger assets like offshore, for instance.
Okay, yeah. So can I see it as an energy supply contract then, in fact?
It is an energy supply contract, but it's a specific kind of energy supply contract, because in the usual energy supply contract, the traditional energy supply contract, you have an energy supplier that supplies energy to a consumer, in this case an industrial consumer. And that is usually a one-size-fits-all contract. I mean, you've got a couple of terms on which you agreed, but in general, it's one party supplying the energy, the other party consuming. The PPA is usually a part of the energy supply contract. It can be a part of an energy supply contract with one supplier, but it can also be a separate agreement with a producer on top of a traditional energy supply contract.
Okay, yeah. And in terms of details, maybe, is it typically, indeed, as you say, long term? So we're talking about, I don't know, 5 years, 10 years, and do you have standardized ways of doing this? Is it always a fixed price or fixed volumes, or how should we look at this?
Usually the volume is not fixed, because that's typical about a PPA agreement, is that you try to make an agreement with a renewable asset producer who doesn't know exactly how much energy is going to produce. It's either wind or solar in most cases, sometimes biomass. But so the assets do not know how much they're going to produce, and so by definition, the volume that is being traded in the contract is volatile. It depends on the actual production of your renewable asset. But the duration of the contract, that can vary between there are PPAs of 1-2 years. Typically, it's just it's not the standard way to which PPAs are referring, because most of the time when we look at an industrial segment, people talk about more long-term PPAs to find a kind of energy security or energy hedge on a more long-term agreement, which typically is then 10-15 years, which allows also the renewable energy producer to invest into assets that can produce that kind of energy.
Okay, yeah. You mentioned hedging, so it's a bit related to this, hedging or clicking, as it's also sometimes called in industry. So this means that you have a certain long-time contract and it's a fixed price then, or is this also...
That's the idea. So in most cases, the volume is volatile. It depends on the actual production, but the price is usually fixed. It can be indexed to a certain market formula, but the natural interest of the two parties to find a long-term agreement is to have that at a fixed price, so that both the consumer and the producer have a kind of a security on the trade they do.
Okay, yeah. Well, this brings me to the link to flexibility or energy flexibility. How we look at this is industrial parties, they can increase or decrease their consumption based on price signals. Do those PPAs with then a certain fixed price formula do they hamper the flexibility or energy flexibility in industry? Or
Actually, not at all, and quite the contrary, because what we can usually see with PPAs is that a PPA is signed with a renewable energy asset. Now, most people have heard in the press that you have some negative prices in the market and so on. The more renewable energy we have, the lower the prices are. And that's typically true. Whenever the sun is shining or the wind is blowing, prices tend to be low. That also means that usually PPA agreements with renewable energy assets tend to be below average market prices. There's a kind of a discount factor or a capture rate factor that's applied that gives you access to a cheaper energy contract. So as of then, the consumer, when he has signed that agreement, gets a kind of a natural incentive to shift as much of his consumption that he has towards those moments when the PPA is delivering energy. So you get a kind of it's not because it's a fixed price agreement that there's no incentive anymore to be flexible, because you try to make the most out of that PPA by consuming most of the volume that you can get.
okay, yeah. So if I look at it this way, so normally you would look at price signals. If you have energy flexibility or industry price signals, you consume more when price is low, you consume less when price is high. But you say that when you sign a PPA, the price may be fixed, but you get an as produced volume of wind or PV energy, and you are incentivized to consume it at the moment that the wind is blowing or the sun is shining.
Indeed. So still the price is supposed to be lower than the market average. So that means you try to shift your consumption to it. It's no longer waiting for a price signal. You fix the price signal, but the moment that it arrives depends on the renewable energy being available. And so when that occurs, which typically 1 or 2 days ahead, is the moment that you try to make the most out of that PPA agreement that you've signed. Yeah.
Okay. And how does this work in practice then? Because then you need to know, or you need to forecast when you will have the energy that you bought at a fixed price. Or?
Ideally, yes. Ideally, if as an industrial consumer, there's actually multiple ways to integrate a PPA into an energy contract. Some industrials only use a PPA for like a very tiny part of their energy consumption, which then means that in general, they'll be consuming the green energy all the time. But there are more and more industrials who make a significant part of their energy contract related to a PPA. And then by nature, the wind farm can produce by times more than the actual industrial is consuming. So it needs to make sure that it can shift its consumption towards those moments when the wind energy is available. Again, to lower the overall energy cost.
Yeah. Because if it does not do that, then indeed, as you say, sometimes you could have more energy at a certain moment bought via the PPA than what you consume. And then what happens? You sell it again on the market?
Depends a bit. So there's actually like 4 different, again, there's many different versions, but there's 4 different versions of PPAs that usually come across. The most popular one is what they call a paid as produced. It's a price agreement on a volume that's going to be sold, which depends on the actual production. Whatever the wind farm or the solar installation is producing is bought by the industrial consumer. That means that if he's not consuming it himself, then he's reselling it into the market at the price of the market at the time, which usually introduces a bit of a price risk on the consumer side. You have the opposite of that, which is the paid as consumed, which means you consume as a consumer what you've always done. And if there's renewable energy available, it is sold to you. If you don't consume the renewable energy, then the producer has to sell the surplus into the market. Then you have a paid as nominated, which is a situation in which the day ahead of delivery, the producer makes a nomination, says how much he's going to produce, and that is the volume being transacted into the contract. It's usually something that we only see at the very large-scale producers that can handle these type of daily forecasts. And then you have a paid as baseload, means you translate actually the production of renewable energy asset into a baseload volume that is then being used. The baseload volume obviously has less impact on the flexibility, because then for the consumer, this is a typical, let's say, traditional click contract in which he has made a baseload price agreement with somebody else.
Yeah. And then the last version, the baseload one, it's not typically all green then, I suppose, because it's
not all green, and it can be green, but it's actually the producer who has to fabricate from his renewable energy profile the baseload profile that comes out of it.
Okay. Yeah. So to come back to the term hedging, so if I understand correctly, with a PPA, what you do is you fix your energy supply for a pretty long time in advance for a certain fixed price. So you take away the price risk, I think, but then probably you create a volume risk because you buy a certain amount of energy for a certain time in the future. How does industry work with this, and how does this relate to flexibility?
I think the volume risk is largely depending on the a known production that the renewable asset will deliver, because usually a PPA is signed based on an equivalent amount of megawatts or an equivalent amount of percentage of the output of the renewable energy side. How they typically deal with it is I think they start making forecasts about what is the actual assumed volume that can be part of the contract that the producer actually has to come up with these type of volume estimates, then take those into the normal budgeting cycles of the industrial consumer. Yeah.
Okay. Yeah. Perfect. Then maybe on all the types and the flavors of the PPAs, I think PPAs exist for quite a long time now. Is there any difference between a PPA that was typically signed 5 years ago and today?
I think that what we do see, which is kind of emerging nowadays, is what we could call the corporate PPA. Yeah? So we used to have PPAs, quite a lot of PPAs, between suppliers and renewable energy producers, which usually didn't find their way into the industrial consumer directly. The only kind of PPA to which an industrial consumer was exposed was the on-site PPA, as we would call them, so which is on the site of the industrial consumer. Somebody has built a wind farm or a solar plant, and that produces or that delivers energy directly to the industrial consumer through the electrical system on site. But what we do see since the energy crisis, we've actually seen energy suppliers stepping down on offering still multi-year contracts, especially at fixed prices. And since 2021, 2022, this has become a bit of a more risky business. But we have seen the need of industrial consumers to hedge against price volatility. And so typically they found themselves on the other side, the opposite side of the coin, of renewable energy assets producers who also wanted to get these type of price securities in. And so those have found each other in what you could typically call a corporate PPA, which is then an agreement which sets outside or inside in a traditional energy supply contract that gives this kind of price assurance for both parties.
Okay, so that's the shift that now it's more between the renewable energy producer and the consumption side, the industrial party, where before it used to be with an intermediate party then who
Correct.
then resold the energy probably to the households or industry.
And that traceability that you get through this type of direct agreement is one of the very key and important parts of these corporate PPAs, because it's that traceability that usually supports environmental goals or corporate sustainability initiatives at the industrial side.
Okay. You also mentioned the on-site PPA. So this is then, I don't know, a wind turbine, PV panels on-site of the industrial party. Has this any advantages over an off-site PPA then?
The on-site PPA has always had the same advantages as it has had since the beginning of the market. You kind of avoid a number of taxes and a number of grid contributions that you have to pay, grid fees that you have to pay. Other than that, it usually comes also with its set of complexities to integrate it into an industrial site and to keep it electrically isolated from the rest of the installations.
Yeah. But in terms of contracting details, it's not much difference. It's more than it's more the synergy of avoiding the grid tariffs and the taxes.
Now, typically on-site PPAs are for the entire lifetime duration of the asset, because the asset cannot move and the industrial consumer cannot move. So typically you have very long-term contracts running up to 20 or 25 years with a right to install on the site as well. Whereas within let's say off-site PPA, you usually don't have these type of land lease agreements or anything like it in the agreement, because they typically don't apply to that situation.
Yeah. One thing I read recently is that renewable producers are now also combining with batteries, so they can shape a bit their PPA profile. Do you have any insights on this, how this works, and how this could, I don't know, benefit the industrial party? Does it create more options for flexibility, or does it hamper flexibility?
Well, I think if the flexibility can only be exploited maybe once. So if the producer starts to align himself to the consumption profile by using a battery in between, then obviously there's a bit less of a need for flexibility on the industrial side. Now, if we look at the overall economic picture, then it is sometimes cheaper, and I think in most cases cheaper, if the industrial consumer starts to first optimize its consumption profile towards the renewable energy production profile, because the battery typically is still, it's declining, but it's still quite significant investment to just achieve this kind of alignment between the production and the consumption profile.
Yeah. So if I understand correctly, it's maybe a two-step thing, that you first try to integrate as much renewable in your industrial side as possible by shifting a bit the consumption, but you could top it off with some battery flexibility to align your consumption profile more with the renewable production profile. Or?
Yeah, I mean, if we slim that down to, for instance, a simple household, we can see a lot of people installing home batteries today that, first of all, have not electrified a lot of processes in their home, and secondly, don't really manage their energy consumption. They still plug in the car whenever they get home, and then they've bought a battery to make sure that they don't have to schedule the charging of the car. It's a bit the same on an industrial level. You first try to optimize your process, you first try to control your process, and then you actually look at technology that can help you achieve the topping up of those lost percentages to align them. But I think a lot can be done already in with the industrial processes itself.
Yeah, okay. Another point I wanted to touch upon is a contract for difference, and how does it relate to PPAs? Because we've been talking about fixed prices, but a contract for difference is, I think, a bit different than a fixed price.
Yeah, it's typically a contract for difference. You can also refer to that as a virtual PPA or a financial PPA. It's typically not a contract in which the energy itself is exchanged between parties, but it's a contract in which they have agreed upon a price, but both parties market the energy themselves into the market. So that means that the renewable energy producer will, for instance, sign a spot market-based contract with whomever wants to buy his energy, and the industrial consumer will buy a spot market indexed supply contract. And because they're both related to the same market price index, they've made an agreement between themselves that if the market price is above, let's say 70 euros, that then the industrial consumer is actually paying too much compared to the price agreement they had. So then the producer pays the surplus to the consumer. The other way around, if the market price is lower, then the producer is actually losing money because he's selling at a price which is below the price agreement he had with the consumer. So that means the consumer is going to pay that difference to the producer. That's why it's called a contract for difference. It's actually, the agreement is on the price difference with respect to a fixed price agreement and a market price index.
Okay, yeah.
The nice thing about that is that you have... you can basically apply that to any type of situation, because you don't need the involvement of an energy supplier or anybody else into the value chain to achieve these type of contracts. And I think you have a couple of consulting firms that are starting to specialize now in brokering these type of agreements. So it's becoming more and more popular.
Okay, so it's a certain price formula, and you take away part of the price risk for both parties, in fact.
Correct. But it's related to, in most cases, the production profile of a renewable energy asset, of a specific renewable energy asset. Therefore, there's a bit of traceability on how this works. And the advantage is that although the energy is not physically exchanged between the industrial side and the producer, you still have the financial guarantees, the financial stability that the agreement brings.
Okay, yeah. Yeah, I think we talked a bit now about, I think, the advantages of PPAs. Are there any disadvantages of signing a PPA, either for the renewable supplier or either for the industrial party?
I think the most important, let's say, disadvantage is maybe a big word. But the most important point of attention when an industrial consumer starts to look into PPAs is that in most cases, he's a bit overpowered in knowledge by the other side. So it's always good to, let's say, make sure that you have well agreed upon the principles of the agreement, that you understand the principles of the agreement. We've talked about paid as produced and paid as nominated. There are also topics like balancing costs that come into play. Who is paying those? And then, of course, it is always better if you're well informed that you do know exactly why you're buying this energy at a certain price, instead of just blindly, let's say, comparing the PPA price to an average market price, because by nature, a PPA is lower in price than the market price.
Okay. Well, you say that by nature it is like this, but will it always be? Because you sign a contract for a pretty long time, most of the time. Are you always sure that you have a lower price than the market price?
Oh, well, maybe it's a lower price than the market price at the time of signing.
Okay.
So that's maybe the most important. It's maybe something that I should have said up front. But what I mean with the lower value of a PPA compared to intrinsic market value, or the average market price, is that we do see that whenever, for instance, the wind is blowing, all wind farms are producing, and on average, these prices are lower. You will find that in literature it's called a capture rate. So typically, a wind farm loses about 10% of its value compared to an average market price for a baseload. On top of that, you have a balancing cost. And so those costs are taken into account, and they naturally make that the PPA is valued, the wind energy is valued at a lower level than the average market price. But if you don't take that into account in an appropriate level, then obviously as an industrial consumer, you might end up buying a PPA, which is actually too expensive for the type of energy it's producing to you.
Yeah. Okay, I understand. Yeah.
And that's typically one of the disadvantages, let's say, or the risks of stepping into PPAs for industrial consumers is that they need to be well advised to fully understand this, because in a traditional energy supply contract, it's quite straightforward. There is a price or a price formula and times the volume that is on your meter, and that's more or less the bill that you're going to get. A PPA is a bit more complex in terms of economics.
Okay. And is this something that you see that industrial parties are struggling with this, with grasping the details of the PPA and that they need to be advised, or?
Depends a bit on the level of the industrial consumer. I think we've seen a couple of industrial consumers that have actually been spearheading this corporate PPA market. And then we typically look at the very big companies like Microsoft, Google, Amazon. They're known, Nike, they're known for these type of corporate PPAs. They've actually pulled this product into the market. So they don't have that issue. You can see that dedicated energy teams at very large consumers, BASF, ArcelorMittal, and so on, they also usually manage all of these economics. We do see corporate PPAs emerging now into a medium tier market, where it gets to medium voltage sites or multi-site agreements. And then typically you have somebody who is only, let's say, partially occupied by procuring energy, then in those 2 or 3 or 4 weeks that he has to sign a contract, needs to get equipped with sufficient knowledge to judge this contract. And that's usually where the risk is a bit situated. Yeah.
Okay, yeah. Coming back again to the flexibility part. So if I understood correctly, you don't see any hampering of making use of your energy flexibility by signing a PPA or by having a PPA. But you just mentioned that there are different types, different flavors of PPAs. Not all industrial parties are that well knowledgeable or knowledged about the PPAs. Do you see any possibility that the PPA might hamper the flexibility, or you say no, it will always be in favor of flexibility?
It changes the optimization that you're trying to do, of course, because typically when you look at energy management solutions, they try to optimize against a spot market price or a balancing price for that matter, which means it's a very volatile price that changes every quarter hour, every hour. And then basically you have to decide whether it's an interesting price or not an interesting price to influence your consumption profile. Here in this specific case, you have a price for the PPA, which is a fixed price. If it's way lower than the average price that you will get for your supply contract, then you have an interest of shifting most of your consumption to that price area. But it can very well be that in the course of the 10 years of the PPA actually becomes more expensive than the market price, and you actually get the reverse action to take into account. So you try to avoid consuming from the PPA, which is it's the same flexibility, it's the same shifting of demand, but based on a price trigger which is no longer volatile. It's a fixed price trigger.
Okay. Yeah. So it does not really hamper the flexibility. It's just another way of looking at it and another way of optimizing.
I will definitely change the parameters of your algorithm, but that's but it's still the same shift in flexibility that volume that you will have to do. Yeah.
How do you see the PPAs evolve in the future? Will they change, or are the PPAs that today being offered also the ones that will be offered next year?
The PPAs to industrial consumers itself are already quite a novelty. I mean, I think we've seen them popping up in the last 2-3 years more actively than they were before. I think before 2020, 2021, we had a couple of PPAs signed a year in Europe. And right now, I think we're signing them on an almost daily basis between industrial consumers and producers. I think what you can see is that they are one aspect of the complexification of an energy supply contract. So it used to be just one part, you negotiate the price and you're done. Right now you can see that next to your energy supplier, you have your corporate PPA or your renewable energy producer that sells you a direct contract. You usually also get involved with a balancing service provider or an aggregator or a flexibility service provider, no matter how you want to call that, who itself is also becoming more diversified in its products. It used to be just grid support products. Now they're also adding, for instance, distribution grid support mechanisms as well in certain countries. But on the PPA itself, we can see that we're just starting with these type of contracts. We do see that, for instance, PPAs nowadays usually also involve or get more and more rights for the consumer to also shut down the production profile. Basically, if the prices are negative in the market, then why would you like the wind farm to still produce at 70 euros a megawatt hour for your own account? The consumer typically asks the right to be able to shut down the wind farms if for economic reasons it doesn't make any sense anymore.
Okay.
Now, that already complexifies the industrial consumer's profile, because usually he had to manage his own consumption profile. Now he has to align that to a renewable energy side. And then on top of that, he can shut it down. So he also needs to make that call to whether he actually wants to consume this part. Then there's other economics that come in play, because if you shut down a producer, you shut down his main revenue stream. So you also need to compensate him for that, which is also usually then part of the agreement to look at how to compensate this renewable energy producer in that specific circumstance.
Okay, that's interesting. I did not know that. So this means that if he indeed does the call to shut the renewables down, then he will just consume from the market, so to say.
Correct.
And he will pay the negative or will receive some money to consume at that moment.
Yeah. And we've seen that it can be based on various triggers. So first of all, for wind energy, it's usually just based on a day-ahead market price index. If it goes negative and it goes significantly negative, that compensates the cost of on-site consumption. Then the trigger is made to shut down the wind farm. But if we look at solar, for instance, balancing costs of solar have been exploding in the past few years, mounting up to almost now, I think, 30% of the overall revenue of the energy producer, which means that from time to time, solar assets are being managed from a balancing perspective. It means they can be shut down on a quarter-hourly basis to optimize their balancing costs and still make sure that they deliver to the industrial supplier, industrial consumer, a higher value product, so to speak. And that is, of course, something that will significantly involve the industrial consumer more into the production process than they usually were. Yeah.
Okay, yeah. So it will become a bit more complex in the future, probably.
Well, if it is rewarding. And I think with solar energy right now, we can see that there's a lot of new startups, not always new startups, but there's a lot of initiatives on the market and startups playing into what they call PV curtailment. So you can buy services that actually curtail your PV for a certain service rate. And they usually find their way into PPA agreements because they influence the volume being delivered in that contract.
So yeah, maybe a bit practical. So we did a bit about the theory of PPAs, but as an industrial party, how would you now tackle the issue of okay, I want a PPA. How should I start with this?
Now, I think in most industrial parties, they start by contacting their energy supplier. Now, the energy supplier itself can help, of course, because they usually offer these type of products, but they have a bit of a conflict of interest because it obviously takes away a part of their own business. So depending on the relationship you have with your energy supplier, that might be your first point or first party to go to. You also have a couple of specialized firms that work on these type of agreements. I think in Belgium we have an IA, for instance, that does this type of consulting services. But in general, you have specific broker agreements, like for instance, a Pexapark, a Swiss company, if I'm not mistaken, that actually does nothing else but brokering PPAs. So you can also find reports there about what is the value of a PPA, what should you typically take into account. They can also help you with this setup. That's done from a consulting point of view. But I think most industrial parties, they start to look into their own network of related companies or friendly companies. Whom of them are looking into, for instance, having an on-site PPA and having a surplus of volume. So having, for instance, too much wind energy or too much solar energy on a certain rooftop, and then first try to make a deal with another industrial party where they buy directly from the friendly colleague, so to speak, the energy in a PPA. Then usually if they get to that point in time, they will involve at some point in time an energy consultant, and then I would definitely advise to take somebody that has a bit of experience in the matter, that can show some reference projects on how to structure these deals. Usually also a law firm gets involved at some point in time because of the long term of the agreement and to make sure that all of the economic balances that are struck between the parties, that they also remain in place for the next 10 years or next 15 years.
Yeah, that seems logic indeed. Yeah. And it's then typically the broker maybe who also does the fitting. I'm just thinking, do I need a wind PPA? Do I need a solar PPA? Do I need to match it with my consumption? How do I choose?
Yeah, that's the advantage that energy suppliers have. They usually have a portfolio of diversified assets, so they can usually give you a PPA of a mixed amount of technologies, which is then a better match usually with the industrial consumption profile. Obviously, a producer that only has one wind farm or only has solar farms cannot offer another type of profile. But usually it's indeed the broker or the expert or the consultant that they put on the file that is usually going to try to make a good match between the two. And I think what is definitely would always be a good advice is to make sure that the broker pays or plays for both parties, so that he explains the details of the PPA on both sides, because it's not about making sure that one of the two parties gets into an unbalanced position or an unbalanced contract that will in the end materialize, that will become visual in the invoices. So it's not about the idea of hiding risks or hiding costs, but it's about making sure that both parties transparently know what they're about. And then I think the PPA can add a lot of value into the energy supply mix.
Yeah, and then you need an expert, of course, to do this, I suppose.
Yeah, an expert or somebody at least who has done it before. Like we said, we've talked about paid as produced, paid as nominated. We've talked about balancing risk. We talked about capture rates. I think for most parties who got into this PPA in this podcast by hearing for the first time that a PPA is a power purchase agreement, I think all of those terms might sound a bit technical, and then it's always good to consult somebody. Obviously, you also have ChatGPT that can help you quite a long way nowadays as well. But ChatGPT doesn't write your contract still.
And you always have to double check, I think. Indeed.
It's always good to know whether ChatGPT has made no errors.
Indeed. Yeah.
You can always ask it to do 2 + 2, and then usually it ends up with 5, I think. So,
Indeed. So I would prefer to have a person sitting next to me than ChatGPT advising me on PPAs.
Yeah, you can also see that in most cases, this is a long-term agreement. So basically, it's a bit like a marriage between two parties, a producer and a consumer. So they need to get along. They first need to get along before they put anything on paper, and then when they put something on paper, they also need to get along with what is written. And so it's usually not a very objective evaluation. Sometimes there's also just a subjective part where one party wants to take a certain risk and the other one doesn't, or the other way around. And people need to strike a balance between them. And that is something where, a mathematical algorithm cannot help you in that respect. It's an agreement between two parties, and what the one gives is what the other takes. But in most cases, the PPA is about the combined win that both parties have, of course.
Yeah, okay. And more and more PPAs are being signed, so I suppose more and more parties find each other and do find a good marriage, so to say. Do you see anything hampering the signing of PPAs? Could there be any measures taken to foster even a bigger increase in signing PPAs?
Well, that's a good question. I think for the moment, I wouldn't advise doing the same thing as we've done with flexibility. I think with flexibility products, we've kind of created a parallel market to the energy market, where energy suppliers could not veto against it, could not interfere in the negotiation process, just to make sure that this market would emerge. I think I wouldn't do the same thing with the renewable energy, because it is that much integrated with the overall energy supply that it's sometimes difficult to just, let's say, cut out. The energy supplier has to accept whatever is the outcome of the negotiations. So I wouldn't really advise against that. I think it's mostly the well understanding. I think there's quite a lot still that we as an energy sector can do, is to explain the mechanics of these contracts and why is there a benefit to both parties. Then I think that might help foster these things. I think it's a nice way for the energy transition, at least, to succeed in the future. Because in the end, if you're producing wind energy or producing solar energy, if you're producing something, somebody else has to be willing to pay for it. As long as we stick with, let's say, consumption contracts, which are usually very short-term, 1 to 3 year contracts based on a spot market index, and we have energy supply coming from renewable assets that need 10, 15, 20 years price assurance, then we kind of push this towards a government that has to come up with CFD or other kind of subsidy mechanisms. I think that's not the way forward. I think if we want renewable energy, then there's a good reason why consumers can engage into long-term agreements with their producers to do so. Sounds a bit strange compared to the market that we've known in the past 20 years, but it was actually the beginning of the energy market. When you would buy a light bulb, you also would buy a contract with an energy generator that would construct the generator for you, back between the two wars. So I think we're kind of returning to the scheme where if you want to build an asset, you need to find a consumer that wants to pay for it. And that consumer has a benefit because he gets a 10 to 15, 20 year certainty on his energy cost, which I think, compared to the past few years that we've seen, is an asset.
Yeah, indeed. Yeah. So it's price risk, taking away the price risk for both parties, in fact.
Correct.
And for the industrial party, it's renewable, it's green, it's 0 grams of CO2. Yeah.
Correct.
Yeah. Okay. Thank you very much, Dieter, for this talk on PPAs and the impact on flexibility.
Thanks for inviting me, Jens.